You are listening to chartingwealth.com for Monday, the 13th of June, 2016. What do we have going on? Well, this is our weekly review and forecast, and we are going to be going through all of our charts that we review every day. We're going to be looking at the weekly, though. This is our weekly review and forecast, so we're going to look at where things are setting up on the weekly chart, sort of see what happened over the course of the week with the daily chart. Then we're going to talk about events that moved the charts over the last week and what's going to be going on in the coming week as far as events that could affect the market, things you should pay attention to. So let's jump right in. We always start with IYY, which is the iShares Dow Jones U.S. Total Market Index Fund. In other words, IYY tracks the entire stock market. What has it been doing? Well, if you recall, when the year first began, the market actually took a tumble. It started off, and the week that ended on the 8th of January was a down week. In fact, we had seen the market already moving down about mid-December, and then it sort of leveled out that end of December, the 24th and the 31st, and then, boy, after that, it just dumped over beginning in January. Well, it ran all the way down until it started moving up around the 19th of February. It crossed over on our charts, moving up. On the 4th of March, we had a nice clean crossover, both at the same time, the MACD and the derivative oscillator. We had great green candles that were moving up, the green open box candles, which are our best type of Hinkin-Ashi candles for up movement. And that went all the way up until the week ending on the 29th of March. Then the market moved down for about 4 weeks and then started moving back up again on the 27th. Now, the entire time, we have yet to have a crossover going down. It was getting the closest around the 20th of May, but never crossed over going down. It went over and started moving up again and has been moving up for the last 3 weeks. This week ended as an up move on our Hinkin-Ashi, or average pace candlesticks. Derivative oscillator gained a little bit of energy. Again, derivative oscillator had moved way down. The 20th was the lowest. That's also the closest that the MACD had gotten to the signal line for a crossover going down. So we're still in a confirmed up move, even though at the end of the week, the markets were down 1.08% for the total market at the end of the week on the last day. Now let's look closely at what went on throughout the days during the week. Well, we saw the week started, of course, on the 6th. We have a 2-day trend line that we use every day that the market remained above until Friday, but it went up Monday, Tuesday, Wednesday, and then we got a spinning top, lots of indecision on Thursday, and then a big down day on Friday. In fact, the bears were able to drag the market even further down. The bulls were able to pull it up to have it close very negative, but not as negative as it could have been below the 2-day candle. Still don't have a crossover yet, even on the daily chart, but lots of down movement primarily on Friday that pulled the market down. So again, we're still in a confirmed up move on the daily chart, but the big chart, the weekly chart, what we call our double long, is still up. So keep that in mind as you go throughout the course of this next week in your trading, realizing the big trend in the market is still up. All right, now let's go from IYY to the S&P 500. It was down 0.95% on Friday. It crossed over similar to IYY, the total market. The S&P 500 started moving up with a crossover on the 4th of March. It had already actually started moving up all the way back on the 19th of February, but we didn't have confirmation until the 4th, the week ending the 4th of March. Moved all the way up, very similar to IYY, till sometime around the week ending the 29th of April, moved down for 4 weeks, and then it's again moving up. Looks very similar to the total market. Let's look at the daily and see if we see anything different there. Daily chart, the week started off again strong after ending a little weak, but started moving up on Monday, Tuesday, Wednesday. Spinning top means indecision for us on a candlestick. Big move down on Friday. Still not yet crossed over going down. Derivative oscillators lost a lot of energy. The MACD and the signal line appear to be getting very close, but again, still in a confirmed up move on the daily. And again, keep in mind throughout your course of the trading, investing over the next week, our long-term chart is still up. Now again, what's a good reason if you're a long-term investor of paying attention to these charts? When you know how to read the charts, what do you see going on here at this crossover? Imagine having gotten in somewhere between the low of 191, the high of 201, and watched the S&P 500. If all you did was jump in after it turned over, watch the S&P 500 continue to move up all the way to 210 or so. Not bad if you pay attention, learn how to read charts, practice, and get this stuff down cold. Isn't it great to have these long rides up instead of sitting there like a cork bobbing up and down, making some money, then losing it, then making some more money, and then losing it when the market goes over hard? You could have cleared yourself out somewhere around a high of what, 210? Wouldn't have been a bad place to get out even before this little move down occurred, but you could have stayed or gotten back in when the up movement occurred again. So again, pay attention to these crossovers. They typically are very important and are telling you where the market is going. They're not hard to see. Why don't more people use them? People don't know how to read charts. You're learning. Keep practicing. Okay. Next, we're going to go to the Qs. What is the Qs? Well, that's the NASDAQ 100. What's it been doing? Well, it looks a little different than the total mark in the S&P 500. It's the NASDAQ. It's our tech stocks. It crossed over going up on the 11th. It had actually started, that's the 11th of March. It had actually started going up back after it bottomed out and started its first week up on the 19th of February. Again, continued up until around the 22nd of April. Went down for a few weeks and then started moving up again nicely after it bounced off the signal line on the week ending the 20th, and actually the confirmed up move started the week ending the 27th. Now, how did it end the week? Well, the NASDAQ 100 was down 1.13%, so just over 1% for the day on Friday. But what do we have? Well, we've got a hammer here. We've got an open red box as far as a candlestick goes with a top wick. Not the weakest kind of box you can have. The weakest is where you have a solid red box with a down wick. We have an open red box with an up wick. Still not the best of movement. We don't have the MACD crossing over yet going down, and we're still positive on the derivative oscillator. It actually gained energy over the last week, but pay attention. The NASDAQ is still in a confirmed up move, but not as strong as we would like it to be. So pay attention to that. Now let's look at what the NASDAQ did throughout the course of the daily. We see that the week opened with the NASDAQ, and we talked about this over and over throughout the course of the week, how it's been sliding sideways for over a week. And again, that's never a good sign when you have so many red boxes as we had over the last many days, that the market's going to continue to move up. We saw it weakening, opened and went up a little bit on Monday, then down, Wednesday, Thursday, Tuesday, Wednesday, Thursday, and a big down after it crossed over the 2-day candle on Thursday, big down on Friday. It has crossed over on the daily chart going down, and we have a down derivative oscillator. So of the three charts we've looked at so far, NASDAQ 100 is the weakest. But again, the overall chart, when we look at the big double long chart, we are still in a confirmed up move, but seriously weakened at this point. So pay attention to that if you're looking at any trades or purchases in the NASDAQ of the NASDAQ 100. Pay attention to the weakness we're seeing in the chart. Now, lastly, as far as our indexes go, let's take a look at gold. Gold rolled over going down on the week ending the 27th of May, and it basically paralleled that again the following week ending the 3rd, and then had an up week over the course of the last 5 days. I have an up candle for the week ending the 10th of June. What's really going on with gold? Well, it ended the week up 0.4%. If we look at the daily chart, and again, still confirmed down moves on gold. So gold is still below. The derivative oscillator is negative, and the MACD crossed over going down that week beginning the 27th, but could be correcting. We haven't seen that happen yet. Let's look at the daily chart on gold. Daily chart crossed over going up on Monday the 6th, strong up movement the prior Friday the 3rd, strong up movement on Monday, leveled off some on Tuesday, and then strong up movements Wednesday, Thursday, and Friday. Gold, like we said, crossed over on the 7th, going up on the daily chart. Still, though, negative on the weekly. Pay attention, that's still the drag. We'll have to see. 1 week of up movement did not change the total chart. So pay attention to that. That is where we ended as far as gold went. Now let's talk about the things that occurred in the market this last week and where things might be going in the following week. Now don't forget, I'll say this one time and one time only because I'm not going to be coming back to this, but next Friday is Triple Witching Day, okay? Triple Witching Day is next Friday. If you don't already have yourself a copy, the year's about half over, you need it. You need the Stock Trader's Almanac for 2016 by Jeff and Yale Hirsch, father and son. Actually, not in that order. Son is Jeff, father is Yale. But please get yourself a copy of the Stock Trader's Almanac. You need that. It helps you out so much. You'll see that typically we have a very strong end of the week, typically plus 50% of the time, 57%, 60%, 70% on a Wednesday for the NASDAQ and the S&P 500. So again, get yourself a copy of the Stock Trader's Almanac. Use that like one of your best references in the marketplace. So let's talk about what impacted the market this last week. Well, we saw that the Fed Chairman Janet Yellen, she dropped her references to raising interest rates in the coming months when she gave us a speech on Monday. New questions about economic outlook have been raised based on recent labor data. In a speech on Monday, just days after disappointing employment reports, we saw Yellen not make mention of raising the interest rate and saying things like monetary policy is not on a preset course. Well, again, when the whole world is dragging and indicators are coming in day after day, we've got serious systemic problems. No, things aren't looking great. We also saw bond yields tumble. Record low 10-year bond yield rates were recorded this week in Germany, in the UK, in Japan. And that happened as the Fed backed away from their expected summer rate hike. So again, you see the European Central Bank, Japanese running for cover along with the Brits. We also, had some changes up in the presidential. I guess not really changes up. We've seen some solidifying of what the presidential race is going to look like, particularly on the Democrat side with Clinton coming in strong as expected. But as those things move along, I would encourage you, again, if you don't already have your copy of the Stock Trader's Almanac, you need to read about the presidential cycles. You really need to understand what is on the way, and it's not typically good. Please, again, another reason for you to get that Stock Trader's Almanac. We continue to see Eurozone GDP, it has been actually revised upward for the first quarter, although overall we see lots of weakness out there in the marketplace. Global equities at the end of the week, as you well know, slipped after initially getting a boost on some dovish commentary by Yellen. But again, just cutting interest rates is not going to remake the world economy. So those things continue to move in. The S&P 500 index stalled just shy of its all-time highs. Then it retreated late in the week. We also saw gold. We saw crude prices rise up about $1 or so. And we saw the volatility index go up from the Chicago Board Options Exchange Volatility Index move up from about 14.5 to just over 16. And we saw the yield on treasuries go down from 1.64, go down to 1.64 from 1.52. So again, not a lot of good things necessarily happening out there unless you think free money is going to be our path to success. No, production, the world doing well, people making money, being productive, that's what's going to help us, and that's not what we're seeing. Let's talk about what's going to potentially affect the week ahead. Well, China is going to report on Monday their direct foreign investment, retail sales, and industrial production figures. Again, if those things are particularly bad or particularly good, they can, of course, have an impact on the market. On Tuesday, a couple of things are going to happen. The U.S. is going to release its retail sales data. I'd look for that, see what that's like. If it's particularly bad or particularly good, but particularly bad, you can look at that being a real pull down on the market. That'll happen on Tuesday. The Eurozone is going to report its industrial production data that same day. Then you're going to see on Thursday three things actually happening. The Philadelphia Fed's manufacturing index is going to be released. Again, it's not like a Fed meeting, but these days, really, really bad data, really, really good data, and I can't begin to forecast what that's going to be like. The Eurogroup finance ministers are going to start meeting on Thursday, and the Swiss National Bank is going to hold its quarterly monetary policy meeting. So again, big things to look for on Tuesday is that retail sales and just seeing sort of what China pumps out on Monday. So, and again, like I said I wasn't going to mention this again, but I will. Don't forget Triple Witching Day on Friday the 17th. Well, folks, that's where the markets have come from. That's what they did over the course of this last week. We just told you the things that might be affecting it over the next week. I do encourage you to practice every day. Get in there, look at these charts, listen to what we're teaching on our daily review, and do practice trades. Remember, we're an education firm. We're not calling investments for you at all. We don't do that. We want you to learn how to read charts. We want you to practice. And again, 10 minutes a day. It's all you got to do. But spend that time. Get yourself a copy of the Stock Trader's Almanac. Go through the training that we do on the website, all the free courses that we have there, the various videos and audio and such. Read up, practice, pay attention. Get a copy of our charts that we use from freestockcharts.com. Listen to our 15-minute How to Read a Stock Chart video. All that stuff is free. All you got to do is go to the website, sign up for our daily email. You will get our video podcast. You will, in addition, get the links to How to Read a Stock Chart video, and you'll also get the link to our layout at freestockcharts.com. Start today. Again, this knowledge is power. This knowledge is potentially money in your pocket when you get good at being able to do this and start making your own decisions. I tell everybody, whether you're a value investor or not, whoever wants to buy at the top of the market, you want to buy low, sell high. You want to buy smart. Being able to read the charts is going to help you buy smart and let you know when to get out. When maybe things are weighing on the market, it's not even bad for your stock, but as I tell everybody, big boats and small go down in a harbor when the tide goes out. And when the markets start to crash and things start to go bad, whether you're in a good company or not, why ride that loss down if you can read a chart? That makes common sense. I know it rings true. We love to hear from you at chartingwealth.com. Please go to the website, sign up for the email newsletter. Let us hear from you. Follow us on Facebook, Twitter, Instagram, YouTube, you name it. We are there. If you want to help us out, go to iTunes, subscribe to one or both of our podcasts, the video weekly podcast or the daily audio, which includes the audio of the weekly podcast you're listening to. Do one thing for us after subscribing. Give us a 5-star rating. Say something nice about us. It helps us in the rankings so we can share more of this material. You guys have already made us number 7 in the world the last time I checked as far as stock market podcasts go. You also made us new and noteworthy for the weekly video cast. So thank you. Please continue to subscribe. Give us high ratings. We'll continue to work hard for you. God bless. Hope you have a great week trading from chartingwealth.com.